Which way are they going? Yes, I'm talking about interest rates. Are they going up? Are they going down? Which expert should you listen to? This is Alex Rivlin with the Rivlin Group here in Las Vegas to talk to you about something that is so concerning to so many people, which is interest rates. Where are they going? How are they affecting things? And what should you do? Well, it really all depends on your situation. But before we get to that, I have to ask you a favor, which is to give me a thumbs up if you like the content of this video, subscribe to my channel, and definitely comment, ask your questions below. I would love to hear from you and answer any questions that I don't answer within the video. So back to our topic at hand, interest rates. Where are they gonna go? What are they gonna do? Well, the good news is the Fed did take their pause that we all anticipated they were gonna take. Now the Fed rate is not directly tied to interest rates. Certainty and Treasury and those things are all tied to interest rates much more. However, there is a correlation, there is an impact from what the Fed does. A lot of what the Fed does is what they speak about. And they did still speak about some uncertainty and the fact that they may raise rates in the next meeting. So where does that go? Well, there are experts at all sides that are contradicting each other, that are really just talking about the doom and gloom and then the rose-colored glasses. So which one should we actually pay attention to? Honestly, maybe none of them, because they don't know either. There are indicators that are showing us that rates will go down. There are also indicators that are showing us that rates will go up. There are indicators showing that home prices will go down. And then there are great indicators showing home prices are likely gonna rise. So I don't wanna tell you what they're gonna do. What I'm gonna talk to you about is, what is your situation? What are your needs? What are your goals? What are you trying to accomplish? If you've got a scenario where you absolutely wanna be a homeowner and you're not currently, and the payment is comfortable for you at this rate for the type of home that you wanna buy, then go ahead and move on that, right? Do what you need to do for your family. Get that yard for your dogs. Get that home that you can paint the colors that you wanna paint it and put in the upgrades that you wanna put in. Because one thing we do know is interest rates are cyclical. And whether it takes 1 month, 1 year, or 4 years, there's gonna be a point where you will be able to refinance and lower that payment. We also still have appreciation in homes. And yes, while we can take corrections and we can have market crashes, which are very rare, but they do happen, ultimately, real estate has continued to go up on any 10-year period of time. When you look back, even after our biggest crash of our lifetimes in 2008, 10 years later, homes were back to that price or higher depending on what market you were in. So you really need to analyze exactly why you're going to buy a home, what's important to you. Now, if you're already a homeowner and you're looking at selling a home and buying another one, and you're looking at the fact that you have a 3% interest rate and maybe your payment for this, $500,000 home is $2,500 a month, and going to an $800,000 home now, ultimately looked at it and said, okay, I expect 60% more, so I'm gonna go to $4,000 a month, but you're going to $5,500 a month or $5,300 a month, and you're going, oh boy, that's just so out of hand. Realize that the rate that you were in on that $2,500 payment was also a bit of an artificial rate. It's a rate that we might not see again in our lifetime. Do I think we'll get into the threes again? Yes. Do I think we'll hit the low threes and the high twos? I don't actually think that. Now we may. Again, I'm not the crystal ball guy. We may hit it. That may be one of those artificially created scenarios because the Fed was doing quantitative easing as a result of COVID and some other things that were going on. So we may not see that again. However, this rate that we're at right now is also temporary. It could go up, it could go down, but at some point they will go down for you to be able to refinance. So if the payment is comfortable and you're trying to achieve a goal that you've set out for, then go ahead and make that move. If not, if it's just something you'd really like to do, however, the payment isn't comfortable, don't put yourself in a struggling position. Don't make yourself house poor where you can't pay if the car breaks down, or if there is a scenario of loss of work or anything else that could happen, then that puts you in a position that you're really uncomfortable in, or really puts you in a bad position where you have to get out of it. Then don't do it. Wait. Waiting is okay. However, don't wait because you're trying to time the market. Don't wait because you're waiting for interest rates to go down or house prices to drop. We still have a low inventory issue, and we'll have that for a long time. And if rates drop, we could see a frenzy again. We could see all those people like you that are sitting on the sidelines just waiting to time the market all come back into the market. And now if you're paying $20,000, $30,000, $40,000 cash out of pocket over listing price just to win the house that you're going to want, what good did that do? Did that actually put you in a better position than a higher interest rate? Who's to tell? So again, go with what your goals are, and if the payment's comfortable, and if the payment's not comfortable or unattainable, then wait. But don't wait for waiting's sake. Hope this helps. And once again, I would really appreciate a thumbs up if you like what I'm saying here, and a subscribe to the channel. It really helps me get my message out, and I would appreciate that. And I'm going to continue to bring you more valuable information. Like I said, comment below. I would love to hear from you. Feel free to reach out to me at any time. Thanks so much.